Good morning. I'm Gord Long with the Financial Repression Authority. It's my pleasure to have with me this morning Eric Sprott, a true Canadian legend, a well-known philanthropist, and a recognized base metals investment expert. Welcome, Eric.
Hey, Gordon, good to be here.
Well, it's really great to have you and a pleasure. I know you're on a tight schedule, so I'm going to jump right in so we have time, Eric. The subject is financial repression and other subjects that fall from it here this morning. But in an era of fiat currency and unsound money, we've witnessed macroprudential policies of financial repression in the developed economies. Could you share your views on what this term means to you personally?
Sure. Well, I think what it means to me is that savers can't get forward in the world here. That you get no return on your money. You have to buy the slimiest of assets, i.e. U.S. bonds, and get a measly 2%. And one of the things, Gordon, I've always felt very comfortable saying that the U.S. is for sure broke because their own data tell you that. But luckily, they have a thing called the printing press that keeps them from having to quite go there. But they will dishonor their obligations someday. We're certain of that because they're all unfunded. And, of course, by knocking interest rates down to zero, in some cases negative now, I mean, the saver is just getting crucified. And I include in savers, of course, now people with 401s and pension funds. Pension funds must have had a horrible year last year. They must be having an atrocious year this year with the way things have started off. So, most of these guys are all underfunded. And now we got markets breaking down. So it's just, there's nothing very constructive to say about the whole financial Ponzi that we've gone through since quantitative easing was initiated and negative interest rates were initiated. It's just been horrible for anyone who's been responsible and been a saver. So that's how I think of repression.
As difficult as it's been for pension plans, insurance companies, and chasing yield, we've seen so very little out of the real difficulties they must be facing in many of these unfunded public pensions. And this is in a good market. What happens if we really have a bad market? Question to you, what do you see in terms of markets and going forward here in 2016?
Well, Gordon, I mean, I've been asked that question for a long time, and I've always been bear on the economy here. And, of course, everyone was quite prepared to, I'm going to use the term fade the Fed. If the Fed's printing money, the stocks are going to go up, and everything is wonderful. And, of course, my thesis all along was, well, QE is printing of money is not going to do anything for the economy. And then we saw the example of that in Japan for the last 30 years. I think more and more people are coming to that conclusion here in the U.S. and Europe and Japan continuing. And it's not even one of the former Fed governors,
Bullard?
The guy from Dallas, I think it was, Dallas, who said, Richard Fisher, that it's obvious that, QE was only there to inflate asset prices, but we're all going to pay the price for that. And that's totally been my belief. I'm shocked that the market has held up as long as it has, the stock market generally. And, of course, I'm also shocked that during this whole process, as the policies seem so irresponsible, that the precious metals have not done well. So, I mean, I feel like a lone wolf out there suggesting that people should be in precious metals to protect themselves against this repression. But perhaps as we see 2016 unfolding, with gold probably up 2 or 3% and the market down, whatever it's down, 7 or 8%, people are starting to get the message.
What should investors concern themselves most with in 2016? Are there any drivers or triggers they should be focused on?
Well, there's also things that people should be thinking about. I think the most important thing is that probably 97% of all stocks are in bear markets in the world. You take all the emerging markets, so take your whatever number of stocks listed in China, they're all in bear markets. All your stocks in Brazil, all your stocks in Canada, Australia, they're all in bear markets, okay? And the funny part was there was only a few stocks in the States, the U.S., that were kind of holding things up. And now they're all getting crushed. And so, I mean, we could maybe talk in 3 months. I'll say, well, every stock in the world is in a bear market. How can you not think it's a bear market? Furthermore, we had some tip-offs with these triple C yields hitting 18.5%. I mean, it's unheard of to think that you have a stable economy when yields on triple C's are 18. It's unbelievable to think you have a stable economy when oil prices are under 30, when the Baltic dries down at record lows, and the big rail car loadings are down 10%. I mean, there's just so many signs that it's not working. And one of the things I've always believed in is this whole cost of medical care in the States is being swept under the carpet. And it's huge. Not only do people pay higher premiums, they get higher deductibles, higher co-pays. I mean, there's significant expenses for most people. And yeah, people talk about the energy savings and somehow it's going to boost the economy. Well, it obviously hasn't boosted the economy, because I truly believe that the health expenses have gone way more than any savings that anyone could imagine. So I don't have much hope for the economy here. The stock market's starting to reflect that. And of course, we had a huge bull market from '09 to 15. It looks to me like it's over. So people better be very careful about equity investments. I think they have to be very careful about bond investments, because if you start with the premise, which the U.S. government in their own data proves to you, that the U.S. is broke, the fact that they got $85 trillion of unfunded liabilities, present value, with a GDP of 18 trillion, that's your engine, right?
Mm-hmm.
There's no, and it goes up by 5 trillion a year, and it's such a joke that you kind of know what's going to happen here. So the best advice, and the advice I've followed, my own advice, to own precious metals, because they're going to survive a financial meltdown. And of course, one of the difficulties with a financial meltdown is ultimately people will fear having money in banks. And then all of a sudden, the bank stocks start cratering, and you might get bailed in, and you lose your deposit, even though you still get nothing on it. I mean, there's a lot of risks out there. I think that's the key message.
Yeah, risk mitigation is critical today, but you got to understand all the elements of risk, from custodial, ever mind basics and fundamental, geopolitical, regulatories. It just goes on here, and it is phenomenal what risk you're taking for the yield that you're expecting. What's your expectations for precious metals then this year?
Well, I mean, I don't like to put a number on it, but I've always believed, and I believe this, Gordon, for the last 15 years, the demand for gold, the physical demand for gold, has been well above supply. And that the central banks have surreptitiously provided the extra supply, such that they're getting down to very meager quantities that I think they would have left. And if it wasn't for the paper markets, where they can do whatever they want on a very short-term basis in terms of determining the price, that the physical gold market will overwhelm the paper market. And if and when it does, and if and when, for example, we can imagine some kind of recession/depression or currency crises, which most countries in the world have a currency crisis right now. Most of the population in the world has a currency crisis right now. How are you going to protect yourself here? You know, if you were in Canada, oh my God, the currency is plunged by 20% here. And so owning gold has been a very good opportunity, particularly with stocks fading the way they're doing. So I think that we could see an explosion in the stock price. I don't want to say it's going to, 1,500 or 1,600, whatever. I just think the trend has to be up here when you look at all the data points and all of the changing view of what's going on in the financial world, and this sort of sense that people feel that QE is not working, that the income differentiation between the average guy and the 1% is extreme, which it is, of course, and the fact that the average American, I forget what the number is, but something like 60% of them couldn't even pay a $500 repair bill if they had to. Well, and of course, I don't believe any of the jobs numbers that you get, because they're all crappy jobs, and you lose a good job in energy and it's worth 3 crappy jobs at a bar or something like that. And you see from the income statistics that people's incomes aren't going up. We saw the retail sales in December come out, that were down 21%. I mean, this is starting to smell of an economic policies and financial policies that aren't working.
Clearly, we couldn't agree with you more. Eric, what about black gold, oil? What do you think of that's going on with oil prices, and what's it mean to the oil sands, for example?
Yeah. Well, when Gordon, when you ask questions about markets that are dominated by paper and the influence of central planners, it's always difficult to give an answer that necessarily makes a lot of sense, right? Like, if you would have asked me about the stock market 2 years ago, I said, well, there's just no way the stock market should go up. But sure enough, everyone just they drink the money and the stock market goes up. What should ultimately happen to oil? I mean, ultimately, oil should be going back up, right? I mean, nobody can produce it at $30. Very few people can produce it at $30 a barrel. But you have this crisis going on, and maybe it's telling us we're going into some kind of depression where really the demand falls by 10% or something. But the supply will fall off quickly, at these levels here. So I don't know when the bottom is, but I can't imagine that, 5 years from now, we're going to see oil at only $30. It's just no one can afford to produce it. So, and you're going to get shut down. You have to, sooner or later, you're going to get some shut down. And once they shut down, you're not going to come back on any too fast, right? Let's say the tar sands shut down because the price is 30. They probably wouldn't even start up till it got to 60. Because it's just not profitable. So anyway, I don't have a particular view, and I'm always worried about the impact of the paper markets on things that bear no relationship to any analysis anymore. So, but I think ultimately oil should recover.
Like you, I've seen this time and time again, and everybody shuts down. Let's pick on the oil industry, commodities, because of the prices, and then the time to start up. So when it does go back up, and it will, it shoots up violently because there's such shortages. But you'll go broke trying to chase it on the way down because it just seems to last longer than ever. But you know that in the long term what will happen. But you got to you go broke in the long term trying to wait for it.
Yeah. It's like the same thing as gold, right?
Yes,
it's
exactly.
got to go higher, but it's gone down all these years. And of course, you see the influences in the paper markets, of the commercial shorting and all that stuff. But every ounce of logic in your body says, well, I know it's got to go up here because of what you see manifesting itself in the physical market. China buying gold and announcing it, Russia buying gold, the gold coin sales being strong. The markets, and this is more current, the market's looking sick. And looking more and more like we're in a bear market. I mean, most people today would almost have to admit we're in a bear market. So what do you do in the bear market? You own precious metals.
They can only manipulate, and I really do believe these are the physical, or the paper rather, is manipulated, but my personal opinion. But at some point, any market that's control breaks for various reasons. And when it does, those prices shoot up at such a speed that it's very difficult to catch them. But when that'll be, time will tell. But we're seeing a lot of negativity of frustrated investors in gold and silver today, which is a sign it must be nearing the bottom. But we'll see on that.
I might add something to that, Gordon, that is very enlightening. Okay, there's a company that I'm involved with that, let's say, had a market cap of X, and then they received 1/2 of X for selling a 1.5% royalty, and the market cap never moved. I thought, oh my God, there is no market. Surely to God, by selling a 1.5% royalty on your gold, you get half of your market cap, and the stock doesn't move. Well, where's the market here? So there's a little bit of that. I'm just sort of reaffirming that everyone's so scared to even look at relative values and normal metrics that stocks are at ridiculous levels.
Eric, what is your feelings on the Canadian dollar?
Oh boy, that's a tough one, and that's a tough one because the oil price is so devastating. I mean, it's just devastating. It's devastating for everybody. Whether it's the U.S. or Canada, it's probably a more predominant factor here than down there. But it's funny. The one thing that people forget about energy prices going down is kind of running through the numbers in my mind today. If a country like the U.S. produces 10 million barrels a day and the price goes down 50, somebody's not getting $500 million that day. That's $183 billion a year that they used to get that they're not getting. Then one might put a multiple on, i.e. a cash flow multiple, whatever it is, 5 or 7. I mean, that's $1 trillion in losses in terms of market, the stock market, because the stock market pays for profits. And so it's been had a devastating effect here. I don't even know if we've really adapted to it properly yet because these government revenues are just going to plunge here. Throw in stocks going down, and 2016 continues to decline. It was pretty bad last year. I mean, there might be all sorts of people taking losses and things and reclaiming former capital gains, certainly not paying capital gains tax. I mean, the government sources of revenue are going to be an incredible pressure here. So it's a situation, I can't blame anybody for not wanting the dollar because I don't know that anyone knows the solution. We don't know what the solution. Of course, the solution would be higher oil prices, but there's nothing the government can do about it. In fact, we all get in this sort of dark hole where it gets worse and worse because weakness begets weakness unless there's some outside influence to pick things back up. Typically, the outside influence is zero interest rate printing money. Well, we can't be doing that anymore. So I don't know what they do to try to turn things around.
Well, we just put out a release of we think there's going to be a huge tax grab accelerating in 2016 because of the amount of problems at all levels, federal, state, and particularly at the local level, as revenues are falling, because we sense we're getting very close, if not already, in a recession. Certainly globally, the numbers are staggering. But we can expect the central banks to do something, and we seem to be out of runway with NERP. What do you see them potentially coming? Negative nominal rates, is that a possibility? Helicopter money? What's your
Sure
guess?
it is. Well, I mean, I would guess that the powers that be, they've done everything to try to hold the stock market there. So here it is collapsing in essence. So it's literally collapsing as we're speaking here. Unfortunately, they put themselves in a position where the first rate increase is not even a month old, right? So it's pretty hard to have to admit that you made a mistake 30 days ago and correct it today. So maybe they got to let this market kind of work its way down. But I have no doubt that they will try to jawbone the market up. But I think there's many more commentators today who realize it doesn't work. Even Kuroda, I think, came out just the other day and said, well, I don't think we really need any more printing because it's not having any impact. So, if all the powers that be realize that printing money doesn't work, but just makes the ultimate final problem bigger, I don't know what they do. I mean, negative interest rates would be devastating. Imagine trying to run a pension plan. You get negative interest rates. So you're paying to have money sitting in a bank. And the stock market's collapsing around you. I mean, it's like a horror scene. And as you know, lots of people have predicted that the next financial crisis will be worse than '08 and worse than the 2000 break. And I always like referring to, I was there in the 2000 break, saw it totally coming, saw the 07 thing totally happening. I was short Citigroup, covered at 1, Fannie Mae covered at 1, all those stocks that went to 1, and of course lots that went down. And using that experience, you can just see what's likely to happen here. It's just been postponed, that's all. But I suspect it'll be worse this time. So,
yeah, this time it's going to be global in scope, and they're not going to be able to fix it quite as easy as we attempted to in 2008 with the Fed jumping in, because now it's got to be coordinated. But talking about rates, I see in Japan right now we have negative nominal rates in the bonds, and now in Japan they're trading negative. And who's buying them? Bank of Japan. So I'm talking about corporate bonds. So don't ever underestimate the central bank's ingenuity to come out with something, but it eventually runs out of runway. That we know.
And it might be running out now, for example, if the market didn't buy into. Now, mind you, I don't necessarily know that the market buys into. I think the Fed's in the market, okay? That's what I think. I think the Fed, through their counterparties, when the market gets really bad, they just go in and buy the stock futures and try to jawbone it around with a little nudging. And of course, thank God for them with these HFTs and algos and all that stuff, you just put an order in to buy the S&P futures down the slowest pipe you can. Everybody tries to front run, and you got yourself a recovery, right? So that's
precisely what's happening now is the FANGs and the NOSHs and a few of these stocks are controlling them. There's no breadth, but then you've got all of these index mutual funds and ETFs that have just absolutely exploded. So it doesn't take much to drive it up. And they have to, in my mind, because if it falls, there's so much leverage, and the destruction of collateral is the problem. And so they know they've got to keep a floor under it, in my opinion. Now, that just says they can buy some time, but eventually something's got to give.
Well, it's a question of whether people believe or don't believe, right? And it's like in China, they come in and support the market, but I'm guessing the market doesn't believe it, if you know what I mean. So every time the government doesn't come in, they slam the stock market. And I think it would be the case here that everyone realizes after what's happened here, first of all, starting in August, now sort of December, January, that there's a vulnerability in this market that most people didn't expect. And, they're going to curb, I think, their enthusiasm the next time around. And hopefully we'll see signs of things like gold and silver going up that will tell them, hey, you better get your heads around what the real issue is in the financial system today.
Eric, we have to break. We're up against a hard line. Any key messages you'd like to leave with our listeners?
Well, I think that every investor should watch all the data. The data sucks, including the recent data we had just with retail sales going negative. And I think the New York index for manufacturing just plunged from -6 to -19. You look at things like electricity consumption, rail car loadings, and all, they're all telling you there's no recovery happening here. So people have to figure out, if there's no recovery, then the odds are it just keeps going down and maybe gets quite violent. And how do you mitigate your losses? That's probably the biggest thing. Think about how to mitigate your losses. That's the message.
Eric, it's been an absolute pleasure. I thank you for the time, and I think we kept you on time, and we'll have to have you back again because there's just so much to talk about.
Okay, Gordon. All the best.
Thank you very much. Happy New Year.
Okay.
Bye-bye.
Okay. Bye now.